All right, what's up, guys? Welcome to the video. Anthony here with Special Analysis. Going to be breaking down my trade that I placed on Friday. So I want to go through them with you. I do this for a specific reason so that you have an idea of the way I approach the market, my analysis, interpretation, my expectation, thought process. Because listen, if you're ultimately looking to learn from somebody or learn alongside somebody, you should have an idea of the way they approach the market, because if it doesn't align with the way you want to approach the market, it may not be the best fit, right? So to save you the money and to save me the time, that's why I spend these, I invest the time of putting together these videos. You can see them on a regular basis and decide if ultimately the way I approach the market makes sense to you, and it's an approach that you would like to steer towards. Okay, I'm a firm believer that understanding volume and price action ultimately play the largest role in your trading decisions. Incorporating order flow also places a high probability in your favor, and that's exactly what trading is. Trading is a business of probability. If you have an edge, and your edge is your trade plan, and if that edge and trade plan has a well thought out risk management system that's been proven over time, that is how profitable traders are made. Okay, it's not blindly buying and selling when some indicator or software tells you to. It comes down to, do you have an understanding of what's happening, when, where, and why? And if you do, can you create a thesis around that that would help you place better trades? Okay, so as you can see on my charts here, they're fairly simplistic. Outside of my own drawings, there's really not too much to it, right? There's volume and price action, right? The primary chart here is a 5-minute chart of light sweet crude oil. I also reference a 3-minute chart and often a 1-minute chart, just to kind of dissect what's transpiring inside each of these candles. From the higher time frame, I start with a weekly chart, a daily chart, and then my 4-hour chart is up here in the top left, where the analysis is applied to. I also look at volume profile, and the bottom left here is the dollar index, which I keep an eye on, because sometimes if this is trending hard in one direction, we can see an inverse reaction, not just on crude oil, but on the indices as well. When we trade live every day, we trade the NASDAQ, the S&P, crude oil, and gold. And we utilize those markets because we recognize that not every market's going to present an opportunity every single day. That's just a fact of the matter, right? So we look at 4 markets. I personally have decided, because I've increased my exposure or my risk in each trade substantially, to only trade 1 market this year, which has been working out well for me. I may incorporate another, but for right now, I'm very comfortable doing what I'm doing, and I encourage traders as well. Pick a market or two that you ideally desire to focus on, and really just study applying your edge to that market, because there will be a little fine tuning, right? I mean, reading price action, analysis, interpretation, expectation is the process is fairly the same. Right, but some assets are more volatile, which require a little more risk in order to stay in the trade, where others are a little more tame. So it does, ultimately they do play a little bit differently. So let's talk about the session here. I want to just bluntly tell you that I was wrong, right? Like I had genuinely envisioned price revisiting the double bottom. There was resting liquidity about 10 ticks below. I really thought we were going to test it, and we didn't. And that happens, guys, right? Like, that happens. Now, did we understand why it didn't happen, right? Like, that's the second part. We got to talk about why it didn't happen, and ultimately we did. And I'm going to kind of dive into that right now with you. But I want to give you a little intro to what it is I do, what it is I offer to my clients. I've been at this now for 13 plus years. I love what I do. I'm excited about helping people that are excited about helping themselves, right? I'm not excited about working with people who want to get rich quick or expect this to be easy, right? And until you've invested 10,000 live hours in front of the market, there's a pretty good chance that you cannot consider yourself a consistently disciplined, profitable, professional trader. Okay? 10,000 hours, that's what it takes. How quickly and efficiently you can achieve that, that's ultimately up to you. But like any profession, you want to be the best at what you do. It's 10,000 plus hours, right? So I'm willing to work with people who recognize that and know that that's what it takes to be great, and are willing to endure the ups and downs that comes with it, because that's what it is. Trading is a business like any other business. Right? I've owned a lot of businesses in my life. Not one of them has been easy. Neither has trading. So, all right, into the market itself here. We place a double bottom. Our initial low comes in at 540. Our double bottom comes in at 740, roughly 2 hours apart. You can see we retraced off of this really aggressively. The buying opportunity to get long was right here. Okay, so we came into this high, we broke it, and then we retested it on this candle at 835. We talked about this, right? And we kind of navigated our way basically into the top here, where we start to run out of steam at the 9 o'clock crude open. Right? So market comes down, tumbles really, really aggressively. I'm looking for it, to be honest with you, to flush into the lows. But that didn't happen. So the market comes in, we break this low, which I thought was pretty substantial. We didn't close below it. We pulled back to the VWAP, and right here I got short, where this little dashed line is. I got short at 92. I inside this wick here, a lot of buyers got absorbed. I felt like this may be a confident spot that retesting the VWAP could in fact hold price. And if it did, we could then now push through this low, potentially flushing the lows and going after the liquidity resting below. That didn't happen. All right. I employ a method of paying myself and protecting myself. As price pushed into this wick, I took profit. I moved my stop to break even. I got stopped out on the balance of my trade. Okay? So, all right, I made a little money. I didn't lose any money. I can live with that. Market pushes back up into this area I had identified that we were kind of fumbling around with here. This little kind of indecision here before we pushed higher. I had a suspicion it may provide some form of resistance. Again, right here where this little dashed line is, I anticipated that the market may push back down. It did. What was I targeting? I was targeting the double bottom. I was targeting the liquidity below. Where did I take profit? As I came back into these wicks here, I started taking profit. Why? Because I was wrong again, right? But you can still be wrong and still be profitable. And the way that you do that is having an approach that when the market offers you the opportunity to take some money, you just don't be a pig and you take it. Just take it. Take some. You can leave your part of your trade running. Just take some and then cover your risk. Move your stop to your entry or a tick or two into the profit just to cover the stop market bid-ask spread. Okay? We came back in to this level. Notice this level I marked off when I came to the computer. When this double bottom formed, I marked this off, right? Because once we came through it, we poked above it, and you can see there was a little indecision between these two little candles, and that made me realize that, hey, there's a chance we're going to have, some potential support here. So was this in place, this level? Well, were we watching this? Yeah, we were, 78.70. But the liquidity was resting down here at 78.50. So I didn't think we were going to break the double bottom maybe and continue lower, but I did think that we were going to break the double bottom and consume the liquidity. So I kept leaving a portion of my trade on, thinking that that was going to happen, and it didn't. So I took two short trades here, this one into this low, and then this one into this low again, where we got rejected. I paid myself, protected myself twice. It was a profitable day. I took two profitable trades. Did my anticipation work out? No. But I had the opportunity to conservatively pay and protect myself. Okay? The market offers you the chance to grasp money. You just have to be ready and willing to to take it. So that's ideally kind of how we play things out here, guys. You know, it was really a little, and then we got really choppy. I don't like to trade the chop. Right? I was really looking to flush the lows. I thought, especially here, we placed a lower high. We're going to place a lower low. And it didn't happen. But it doesn't matter. Right? It doesn't matter. Once you place your trade, the only thing that you are aware of is how much you were willing to risk. And the only thing you're in control of is how you now manage that risk, meaning taking profit and protecting yourself. And that's all that trading comes down to, guys. You master that and you understand exactly what you're doing, the psychology of it. It isn't that hard, but it does take many years and thousands of hours to do it. So if you want to learn more, there's some links below. If you enjoyed this video, please feel free to like it, leave a comment. I will personally answer it. If I can do anything for you, my email is below as well. And if you haven't subscribed to the channel yet and you're enjoying learning this type of content, please feel free to do so you don't miss the next upcoming video. God bless, guys, and I will see you in the next one. I hope you have a wonderful weekend.